Our next guest, Michael Pachter, is with us, Managing Director, Equity Research Analyst over at Wedbush. You could check out his Gamer ETF, GAMR, always fun to watch. And I know you have names within that. You have some outperform ratings. Tell me the trends that we've seen in gaming and how likely they are to continue into the new year.
You know, your guest was talking about advertising. He's right that, this shelter-in-place trend is here to stay. I think that a lot of professional workers are going to be working from home a lot more, even post-COVID, post-vaccine. We saw about a 40% lift in game engagement, meaning hours spent playing games in the June quarter. That dropped to about a 20% lift in the September quarter, and that's a lot. Now, there's some seasonality in there. Obviously, people got less concerned about getting sick. Weather was good. People were outside. I expect that it'll probably rip back up to 30% higher engagement year over year in the December quarter. And the higher engagement isn't just people who were playing games before playing more. It's about evenly split between new people who haven't played games before, lapsed gamers, people who used to play who stopped, and existing gamers. And so, the last two pieces, the new people and the lapsed people, are probably going to stick around even post-COVID. And again, to the extent that companies allow employees to work from home, if you're not in a job that requires you to be present, like a hairdresser or like a construction worker, if you're a professional and you can do this from home, I think a lot of us are going to do it from home. So that means a couple hours a day, more free time, and people are spending that time consuming entertainment. So, so your guest talking about advertising, it's a massive opportunity. People are consuming a lot more film, video, streaming, gaming, everything, which means lots of opportunity.
Right, and the shelter in place, they got very used to being home. It's a different environment, and people are nervous, and some people just have valued things different in life. That being said, that bodes well for names like Zynga and also Glue Mobile and Unity Software, because you have outperform ratings on all of those. By the way, at the same time, we're getting PlayStation 5 and the new Xbox for the holidays. There's so much to talk about within gaming. But first, I do want to talk about the tradable stocks, the action that we're seeing. You have outperforms on those three names.
Yeah, Unity is a platform. So, obviously they don't have any games themselves. Think of Unity the way you think of Microsoft Office or Windows, that, if you decide you want to create a PowerPoint presentation, you can make a spreadsheet in Excel and a Word document in Word, and you can take clip art and put all that together in a PowerPoint presentation. It all works really nicely. Unity is that kind of platform for game developers. I have heard of a 7-year-old girl that built a mobile game in Unity from the bottom up. So it's easy to use. It is as easy to use as Windows, and it is the tool of choice. It's essentially free. The enterprise solution is $200 per month, and if you have no revenues from have never created a game before, it's free. So they literally have tens of thousands of users, and that's going to be hundreds of thousands and millions of users. And the trick to why this stock is working is they actually deliver ads. So as game companies decide that they want to have ads in game, and Zynga does this in Words with Friends, if the game was built in Unity, you really kind of have to deliver the ad in Unity. So Unity is enhancing the value proposition by allowing the game company to monetize, and they're taking a piece of that increased monetization. So really an interesting story. The stock's been ripping, as you can tell.
So tell me about some of the consoles in the holidays, and Sony and Microsoft. Are those stocks on your radar? Do you think they're attractive? And what kind of demand are you expecting to see for these consoles? Because I'm already seeing it here, how hot they really are.
I don't cover Microsoft. I have a colleague, Dan Ives, who does, and Sony is in the gamer fund. Consoles are good. Consoles are going to drive profits at both those companies. Obviously, it's a much smaller piece of the mix at Microsoft than it is at Sony. The consoles are sold out by design because the console manufacturers kind of plan what demand's going to be, and then they produce slightly fewer consoles just to make sure they're sold out. That's really good because we're talking about it, so word of mouth buzz, hard to get. And I will say honestly, if you don't have a console, don't plan on giving one as a Christmas present. You're not getting one this year. But they'll be back in balance in April or so, and that's when we'll really know how big a cycle this is going to be. Yes, good, not enough for an investment case in either Sony or Microsoft right now.
GameStop was down double digits after the quarterly report, same-store sales miss. What do you think of a name like GameStop or the concept of GameStop? Is it still
That's a great
going
question.
to work?
Yeah, it's intriguing because they're down about 10 or 15%. They announced that they were going to issue some shares, $100 million at the market stock issuance, and 100 million doesn't sound like very much, but GameStop only has 65 million shares. So the company is literally only about $1 billion company, and 100 million is 10% dilutive. So I think the market's responding to that. The miss on the comp is kind of a tough one because the quarter was the October 31st quarter, and the new consoles launched the next week. And so GameStop, although they had a negative 25% comp, said on the call the month of November was up 16.5%. So they comped positive in November. They said to expect that throughout the quarter. So I don't hate them as much as many others do. Yes, there's a place for physical retail because they take trade-ins. And if you want to trade in your old console and your old games, they will buy them from you. And then they will sell those to people who don't have a job and who are suffering from the recession but want to get their kids some used stuff for Christmas. And they thrive with that business. So I expect that they'll make it. They're whittling their debt down. They're net cash positive. So I frankly don't think they face bankruptcy for the next several years, but I may be wrong.
Right. Well, I guess there really is a need for a physical store that you go in there and you give your old stuff in, you can get some new stuff, as you said. And the stock has been a winner year to date. And the fact that you talked about the conference call in a good November, that's a good sign. Michael, great to chat with you. Thank you always.
Thank you.
Michael Pachter, Managing Director, Equity Research Analyst at Wedbush Securities. Thank you.